Germany has unveiled the biggest stimulus package in its history in an effort to lift the country out of a coronavirus-induced recession. The €130 billion plan will slash taxes, hand money to families, and incentivize businesses to keep training workers. Some 250,000 people lost their jobs in the month of May alone, bringing the total number of unemployed here to some 3 million.
After 2 days of intense talks, they emerged with €50 billion more than anyone expected. And a dramatic surprise aimed to get Germans reaching for their wallets. VAT will be cut by 3% until the end of the year. Now that the lockdown is reaching an end, we need to make sure that everyone has the courage to invest again and to make sure that the consumer demand rises too. For weeks, industry leaders have lobbied hard for emergency help. In the end, there was a little for everyone. There will be a great number of further measures aimed at reviving the economy, and we will agree on a bridging programme using exiting means for middle and small businesses. Among the measures, families will receive €300 per child. The government will help local municipalities cover billions in tax shortfalls. There will be bonuses for companies that keep training programmes despite the pandemic, and purchase incentives for electric cars. Missing amid the measures, long hoped for purchase premiums for cars with petrol and diesel engines. Here, even the mighty auto industry could not prevail.
Joining us now for more is our political correspondent, Kate Brady. Good morning to you, Kate. Germany tends to be highly allergic when it comes to big spending programs, taking on debt. Are we witnessing a general shift in how Berlin handles the economy?
We certainly are seeing a shift, and of course these are unprecedented circumstances that Germany and the rest of the world finds itself in right now. And of course it took some 21 hours of marathon talks, but in the end we know now that the governing German parties are going to be ploughing some €130 billion into rebooting the German economy. And this certainly is a shift in the behaviour here in Germany. The days of penny pinching, or rather cent pinching, seem to be over, at least for now, in the initial response to the economic fallout of the coronavirus pandemic. And let's not forget that this is also on top of the €750 billion financial aid package that was also announced by the German government back at the end of March. So we certainly are seeing a shift here in Berlin.
And some massive levels of spending as well. What are some of your big takeaways from this deal?
So lots of wide-ranging measures, but I think some of the most prominent takeaways are things like families. They're going to be provided with an extra €300 per child on top of that. VAT here in Germany is temporarily going to be cut from 19% to 16%. And we're also seeing a government-supported rebate on purchases of electric cars. And also, interestingly, included in this package is some €50 billion, and that's a fund that's set to address things like digitalization, even innovation, and also climate change within the German economy. And these are issues that Germany has really been falling behind on in recent years. So I think this package is certainly being used to take on some new opportunities as well.
Kate, are Germans comfortable with this new approach? How's the deal being received in Germany?
It has been received quite well. Of course, the circumstances that we find ourselves in right now require a huge response like this. But of course, outside of Germany, there are concerns, especially among weaker economies, especially within the European Union and also especially the Eurozone, that the sheer size of this German splurge, spending splurge, could indeed actually worsen the financial imbalances within the European single market and also within the Eurozone. So certainly some concerns outside of Germany, but this is within the country seen very much as the boost that the German economy needs.
Kate, thanks so much for that. The market's looking at this very closely today. DW's financial correspondent Chelsea Delaney joins us now from Frankfurt for more. Chelsea, good day to you. A lot of investor expectations for this package. How have the markets been reacting this morning?
Well, a lot of investor optimism as well. This is a bit of a good surprise for the markets. We'd already seen the DAX really doing a lot better than other indexes over the past couple of days. It's up about 8%. It's almost regained its entire loss from the coronavirus crisis over the past several weeks. So the German stock market certainly has been outperforming. This package is really the first step towards a recovery for the German economy. And it's important to note that the economy still is going to shrink this year. It's still expected to contract about 6%, even with these stimulus measures. But the German government is certainly laying the groundwork for a recovery through the rest of the year. A lot of these measures are supposed to have a pretty broad impact, things like tax cuts for the broader economy, and in particular, these funds that are going to help businesses, especially in hard-hit areas like tourism and hospitality. All of that should really help the German economy outperform throughout the rest of the year.
Okay, Chelsea, thanks so much for that from Frankfurt.